What's up, guys? It's March 24th, 2025. Had a gap up, a rally, and a sideways price action. That matches the day's expectancy. When we have a big gap up, we can see a tradable leg within the first hour, and then we go sideways for the rest of the day. Big gap up, tradable leg within the first hour, sideways for the rest of the day. Daily chart, 15-minute chart. On the daily chart, we've been selling off. Well, on every chart, we've been selling off for quite some time. And multiple legs lower. Leg 1, pull back, leg 2, pull back, leg 3, pull back, leg 4, pull back, leg 5. There's multiple ways to count this. You could say 3 legs down by the opposite bars. You can count the trend line breaks. The important thing to note is that we're past the second leg, so the probabilities for trading behavior go up. On a higher time frame, this could be a sell vacuum down to support. So maybe the monthly time frame or the 2-month time frame. Exactly, right there. So vacuum down to support. We hit support and now we're starting to rally. This is the monthly chart and that is the 1 second. So 15 bars above the EMA before we touch the EMA. Usually the first touch is a good buy. Last time we touched the EMA was in October and we rallied. Wow, you can see the volatility really started to pick up around here. Around, what was that, 2020? Yeah, that's when the volatility started to pick up. Leg 1, pull back, leg 2, or you can count 3 legs. Leg 1, pull back, leg 2, pull back, leg 3. You can count 3 legs here. Leg 1, pull back, leg 2, trend line break. So pull back, leg 3. Now we're going more sideways, so that matches sideways price action. Daily chart. This is the first bar touching the EMA after that 20 bars. So it's kind of the same principle we just used on the monthly. We're going to use it on the daily. First touch for the bears usually will be a sell. There is a gap here, so we can just imagine this as one big bar. This bar here started here, gap up, and then we rally to the EMA. Did we close above? It looks like we are closing above the EMA. I mean, there's going to be about 12 more bars, but they usually go more sideways for the last hour of the day. 15-minute chart, we had a gap down. We had a double bottom. The double bottom rallied and then went sideways. So double bottom, rally, sideways price action, close the trading range here, closed with bull bars closing on their highs, and that broke out of this range with continuation. I want to see what looks like to be a double top on the 15-minute. That double top is right here, higher high, double top. But 78 doesn't close below the EMA, so it's not the best. And bulls did make a new high before it sold. Bears would want to have the best type of double top, which would be actually a lower high. But it is still the type of double top. Bulls that got bought here, they get trapped, they buy more lower. When it comes back to the original price, bulls will exit for a scalp on their second entry and break even on the first, and bears will short that, creating enough selling pressure. Got a big down, big up. We could be going more sideways than either direction. Right now we're on the EMA, so the market, the EMA is lining up. When the EMA start to line up, so this EMA is going sideways, that EMA is going sideways, we can see more sideways price action. But with this big gap up and the bulls closing above the EMA, maybe there's some momentum left for another bull bar or a bad follow through bull bar or something to happen. I don't think this is just gonna reverse straight down. I think maybe we go sideways, even if it's just the tail creating a doji and then sell, or maybe it becomes a pullback and we rally higher. Right now, I think this bar is strong to get a second leg, but I take that back. It's actually leg 1, pull back, leg 2, pull back, leg 3. So leg 3's favorite trend continuation. The gaps, they were pretty weak. They were weak because, weird. The colors are not really, don't worry about the colors. So here we have 3 bull bars and that creates a gap. That's good. 3 bull bars, that creates a gap. That's good. Here we have a bear, bull. It's not the strongest gap because it started with a bear bar. Then we have a bear micro channel, but bears can't make a gap. That ends up being bought, and bulls make a gap. Then we have multiple gaps here, but they start to get tested and go more sideways after the third leg. Leg 1, pull back leg 2, pull back leg 3, and the market's going more sideways. Two more bull gaps that get closed with bar 36, and this creates a bear gap, but weak bear gap 35, 36, 37 because it starts with a bull bar, but it gets its second leg. I like shorting 42. I thought we would go back down to the one low, but even though we didn't, shorting 40, I like to short 41 because it's a good breakout bar, produced a gap, double top on the EMA, and bear set. Leg 1, pull back, leg 2. So bears already tried, excuse me, I said that wrong. Leg 1, pull back, leg 2. Bulls have tried twice and they have bad closes against the EMA. So I think that makes 41 a good short. And there we have 5 bear bars in a row. And now we have 5 bear bars in a row. This could also get a second leg, but we're in training range, so we expect a deep pullback. And we see that deep pullback here. This makes a gap, but it gets closed pretty quick. With this bar 55. More sideways price action, multiple legs lower, and then we end up rallying. This test support. That's the training range. Bulls trying to get the breakout, but close below it. So there's the gaps we just talked about. Big gap up. Bar 1 is bull bar, so that's good for the bulls, bad for bears because it's showing that the breakout is continuing. Bar 2, strong bull bar with closing on its high, so there's still momentum left after the big gap up. Bar 3, 3 bull bars in a row that also make a gap, so that's great for the bulls. This is the gap. Bar 4 closing on its high with follow through bar 5 and 6. Bar 6 has a tail and it's bull body closing on its low. Bar 7, it's a bear bar. It's the first bear bar after 6 bull bars and a gap up, so it's the first pullback. Bar 8, bear bar closing on its low, but it gets no continuation. Bulls see this as a pullback and they start buying it. Bar 9, bull bar closing on its high. I think this is a good buy, but you have to be cautious. It's going to be a scalp because we're really far from the EMA. And if you're taking this, it's a momentum. You're looking for momentum. Momentum starts to slow down 12, 13, 14. Now we have 3 bear bars. It's a bear micro channel, which you could say bad closes, but it's still 3 bars. So 3 bars against 3 bars is trade range behavior. So if you didn't know that a big gap and then we have a tradable leg within the first hour is a characteristic, you could see 12, 13, 14 and think to yourself, okay, that's a bear micro channel and a bull rally, so trade range behavior is coming soon. 15, small bull bar closing on its low, more tail, so it's a training range bar that has a bull body. 17, bull bar closing on its high, but then we go sideways. Saw 18 sell off, but then it rallied, could act like a pullback. I would avoid getting long around here because now we're in the third leg and bears have had a channel. We don't really know where the high is coming in. 23, 24, 25, 26, another bear micro channel. Now we have 4. So I was looking at this pullback that was interesting because the first pullback only had 2 bars, so it's the weakest out of these 3. Second pullback had 3 bars. You could argue there's a pullback here. You could say these 2 bars are pulling back, and then about counting bear bars, and then look at this third set of bear bars. It's 4 bear bars. So bears are starting to stack strength. I'm not saying they're making money, but I am saying each pullback has had 1 extra bear bar. So the pullbacks are getting stronger. Then bulls get a final leg, 29, 30, 31, 32. Bad follow through 33. Bear bar closing on its low, 34. 35 could act as a pullback, leg 1, pullback, leg 2. 35, what is that, 34, 35. 35 is also a high one in a trading range, and high ones are better fades. You could say 33 is not really a high one. So leg 1, pullback, leg 2, pullback, leg 3, pullback, leg 4. 22 is a high one, you could have faded that. 35 is a high one, that was a good fade. It kind of went more sideways, but if you faded this, you would make money right away. 37, first bull bar touching the EMA. I think a lot of bulls would be eager. I think a lot of newer traders would be eager to buy this candle because it's the first touch of the EMA over 20 bars. But ask yourself what phase we are in within the market cycle. We're in the trading range phase, so you could be buying high if you buy 37. Ends up going more sideways, and bears get a second leg down from 36. 5 bear bars in a row. Then we have a deep pullback. I think this is trying to get a second leg, and it does with 50, 55. So rally, sideways price action, 55 creates a third leg down, so that's leg 1, pull back leg 2, pull back leg 3. Set after third leg, trading range behavior, and we can see that here, more sideways price action. If we wanted to count this from a fractal perspective, you could say leg 1, pull back 2, pull back 3, pull back leg 4. So within here, there's a nested wedge, leg 1, pull back leg 2, pull back leg 3. Could say right here. So there's a nested wedge going on with these bars here, and then we see a good buy on 62. 62 is breaking out above the EMA, but not the best close, but we are in a bull regime. 63, bull bar closing on its high, but it's not closing far past 63, 62. 64 is the first trend line break. I saw this and thought somewhat of an expanding triangle, but then it closed higher, so then this became a first pullback from a leg 1, pullback leg 2, pullback leg 3, pullback leg 4 perspective. 3 bar bull micro channel, bad follow through 68, shallow pullback 69. You could buy that for a scalp into the swing here. I think if you're buying this, you're also buying into a third leg, like 1, pullback leg 2, pullback leg 3. So coming close to bar 72, it could be better to sit out the rest of the day. 73, 74, 75, 76, 77. Bull bars close. It's bull bars, but they're not orderly. It's kind of becoming climactic in comparison. This one's closing on its high compared to this one. This one's closing on its high with a bigger body. This one's closing on its high with a bigger body. This one sold off and then rallied, closing on its high with the biggest range. I'm not gonna say body, because the body would be here, but the biggest range out of all of them. So the candles are becoming climactic, closing on its high. Strong bear bar closing on its low 78. Let's go over the measured moves. Man, this was only 12 minutes. I thought this was way longer. I dropped another channel membership video, guys. It's about trading psychology. I'm going to be dropping more trading psychology videos in there. So let me know what you guys want to see for the ones that did join. I know a few of you have been messaging me talking about trading psychology, so I'm going to start throwing those out and talk about how to avoid going on tilt and, you know, what it really takes to become emotionally strong within the stock market realm. The measured move is met by the end of the day. It's a tough one to hold through this deep pullback. So that's 3 bar micro channel. That was met here with 32. That's nice. Another 3 bar micro channel 1-to-1. Put it at the bottom of the pullback. That's met pretty quick here. 20, 21, 22. I'm not doing the bear micro channels because we're in a bull regime, but then we have a good breakout 36. I like that one. Bad follow through 37, but then it gets 1-to-1 eventually here. Measured moves aren't the end all and be all. They're just designed to keep you in the direction of momentum, just like visually. So if you see 45, 46, 47, you still should get out of shorts because now we're starting to go more sideways. And the best the bears generally can do is get a training range after a bullish day. So far, about half of the day is bullish. So the best the bears can do is get a training range. So if you start to see training range behavior around swing lows, it's best to get out of shorts. 1-to-1 was met, but you do risk so let's draw this again. If you're like adamant about getting 1-to-1 on bar 36, maybe it gets tagged here 47, but if you wait for 55, you're risking a bull breakout here 47, 48, 49, 50. That this price action could have turned into this price action and you would have got stopped out. So I think it's best to start scalping out of shorts once you see 46, 47, 48, 49. Definitely 49 because now you're back to around your original entry. Some bears will take this as an opportunity to add to their position. Maybe they see 51, and there's nothing wrong with that. But it just depends what you have to ask yourself, what are you looking for? If you're looking for a leg 2, well, the leg 2 is met once you went past 36. If you're looking for a measured move, maybe you're willing to hold more. If you're looking for the market to collapse, then you're looking for a rare event because the expectations after a gap up with continuation is sideways price action, and that's actually exactly what happened. Breakout here, it got 1-to-1, 62, 63, strong bull bars, 1-to-1 with 77. There's actually one more measured move we could attack. These 3 bars, shallow pullback, and that got 1-to-1 on 75, 76. Pretty good day. We were talking about this setup in the Discord where it's shallow pullbacks after a good breakout, and I'm glad some of you were able to capture that. I don't do callouts, but we do talk about price action on the weekends. Let me know what you guys want to see. I'm enjoying making these videos. Thank you for tuning in. I appreciate your support. If you learned something, share the show. Don't be a hoe, and I'll talk to you guys tomorrow. Have a good one, everyone.